Hey ICT traders, welcome back to the channel. In this video, I will be showing you one of the best ICT strategy you can use to pass any proprietary firm evaluation. I've used this same strategy to pass the first stage evaluation of this particular proprietary firm. You can actually see I got 25k account and I've made 8% of the account, and that is the exact requirement, $2,000, using this simple strategy I'm about to show you. So let's get into the video and I'm going to show you everything about this particular strategy. So first thing to know about this strategy is that you must select a particular currency pair that you can use to trade, and then I'm going to show you how to go about it. So basically I trade this strategy using the London ICT kill zone. If you don't know what that is, I have you covered. You simply head over to my YouTube channel and then come to playlist. You're going to find this playlist called ICT kill zones. This is where you're going to find everything about ICT kill zones, and I'm going to show you the exact strategy I use for passing the first stage evaluation, making 8% of my account. So let's get into it. So the first thing you need to know is to have an understanding of what exactly is your order flow. How I do that is to basically go to the daily time frame. You can find daily time frame, and then the next thing to do is to just have an overlook of everything. So right here, from looking at my price action, I know that GBP USD is in a bullish market for a while. So the entire trend is bullish, and I'm going to focus on the most recent price action, and that is important because I'm going to show you exactly why you need that. So once I came around here, this is the most recent price action. This entire area is the most recent price action, and that's what I want to deal with. So I saw price did this, having this break of structure right there. All right, this break of structure gave me an idea that price has pushed up to this level, and then I'm waiting to see price retracing into internal range liquidity. That is to reprice into this area. And where is price going to reprice into? Using your Fibonacci tool, you're going to measure the entire range from here to here. So what we do is that we expect price to push down into discount. Discount is basically below this 50%. So this entire movement, this retracement, is what I want to trade. Now look at this. Looking at this from a daily time frame perspective, I will be counter trading, and that is all right because I'm trading intraday. So each of these candle is a daily candle, which means if I'm to wait for price to retrace into this level, which is my point of interest, this particular bullish order block, this area, it will take me weeks, if not up to a month. So this is my point of interest. I'm watching price to come to right here. But look at what happened. This entire movement takes more than 2 weeks or almost a month to reach this area. So this is what I want to trade, and I will do that in the lower time frame. But before then, I just saw this happen from here. I saw something like this happen. Once I saw this three price action, I saw this candlestick closed below this one. This particular candlestick closed below here, and then this one closed below here, and that gave me an idea that price is absolutely going to retrace into this area. I don't know how long it's going to take, but I'm going to wait for it to retrace till I see it come into halfway or even the point of interest. And I started trading it from here for almost a month. I started trading it. I marked that exact area, which is this area, and I dropped down to the 15-minute time frame. So let me show you that in detail. So the first thing to do once you come to the 15-minute time frame is to have your period separator, which is important, okay, or what we call session breaks. It will help you to separate each day from another. So this is, you just right click and then come to settings, go to events, and you will see session breaks. You click on OK. So each of these line indicates an entire trading session. So the London kill zone, that is the London ICT kill zone, is within the time of 2 a.m. okay, pardon my drawing, to 5 a.m. New York time, if you're using the New York time, or 7 a.m. okay, to 10 a.m. London time. So you can figure that out from your own country. So what I did was to take my time zone to UTC +1. That is the same thing with London, okay, UTC +1, depending on your country. If you're still struggling with getting the exact time, you can use the broker I'm using, FXCM, right here for this example. But that is exactly what I wanted to show you, because so many of you are still asking me. So we're going to focus on that area, looking at the ICT Asian range. Let me go back to that exact place I put my line so you can see where I started taking the trade. This is the area right around here. So I'm going to be going through everything. So it started from here down to that area. So the way I started trading this was to focus on the Asian range. And to get Asian range, you can use this indicator. Simply come to indicators right here, click on Asian range, ICT kill zones. This one by this guy called RJG Trader. Click on it and it will help you mark out the exact time. So you can see this is the Asian range. This is the Asian range. And don't forget, I am going to be bearish throughout the trading session until I reach that point of interest in the daily time frame that I marked. So I'm going to take trade only in a bearish direction. So let's get into it. So looking at this, I have seen this area. You can also do some settings to the indicator. Simply come to settings, leave only display Asian range, take out this, take out that, take out this guy, click on OK. So we have this now. The first day I saw it, after those 3 candles printed out, I was waiting for trade right here. So I was waiting for trade. The way I expect to see the trade is to basically wait for price to take out the Asian high, since I'm going bearish. Once I see price take out the Asian high in such a way that it gives me a confirmation that it's taking the liquidity here, I will wait for a shift in market structure from the lower time frame and then I will short it. So that was exactly what I was doing every time I wake up, just once in a day. That's the only thing I'm doing. So the first day I did not see any trade, so no trade here. I waited for the second day and this is it. Asian range. Looking at what we have here, let me just use the replay option. I saw the Asian range right here. This is the range, and I saw price traded above it in London kill zone. You can check the time right here. You can see that is 7 a.m. or 2 a.m. New York time. So I saw this price action, liquidity grab above it. So I dropped down to the 1 minute time frame to wait for a shift in market structure. Guys, I'm going to show you everything in detail. So if you can be patient, just wait till the end, because this is going to help you. So I saw this happened. I saw this movement above here. Price came back. I'm waiting for a shift in market structure. Price created this low and I'm waiting for it to give me a shift in structure. Yes, I saw this happen right here. Taking you through everything I've done. Market structure shift right there. So I was waiting for price to come back to premium because I'm going bearish. I measured this area and I discovered that this particular order block can be a very good point of interest. You know, when you are trading, you're actually doing a different thing from back testing. So it's more of a reality than just doing a back testing. So I was waiting for price to come back here, and I actually wanted to take trade once price comes to this area, exact area. And that was where I want to take trade, and my target was obviously just here, this area. Okay, so I was waiting for price and I put my stop loss just above this guy. So looking at this, price didn't take me in. I remember vividly, price did not take me in. It just reversed from here, and I missed this trade. So I saw this happen again. So when I saw this was when I quickly looked at it, because I'm still within the London kill zone until after 10 a.m. I will not stop looking for an opportunity to sell. And then I saw this happen, and I saw this particular bearish order block. So this was when I decided to enter from here again. To enter from there, I saw this trade, and then it took me in. I could remember vividly my stop loss was here, and I was patiently waiting for the price to do what it can do. So all this price action, I was patient waiting for it to move in my direction, and it gave me the first trade I have that first day. So that was what happened the first day, using this same strategy. After taking liquidity from the upside, since I'm bearish from what I saw on the daily time frame, I'm only going to be selling throughout the week until I reach that point of interest in the higher time frame. Please don't forget that. So the next day came in, I closed the trade for that day, and then I was waiting for the next day to come in. So let's go to the next day and see how the trade goes. So watching everything to happen. All right, so the next day came in, and boom, I was happy. I saw sweep of liquidity above the Asian range right here. So happy I saw that. Going to the 1 minute time frame, I was waiting for price to give me shift in market structure right here. Let me show you. Around here, I actually saw a shift in market structure. Right here, I saw this shift in market structure. This was it. I saw this. I wanted to take trade here, but this one quickly ran away from me. I wasn't close to the chart, and I saw price came back to this area, and this was where I entered the trade from here for a sell. I think I entered here, right here. That was where I entered the trade. So I actually took the trade from here, that exact point. I was targeting here, right that point. So it actually took me in, and once I saw price came to this area, all right, when I saw price came here, I decided to shift my stop loss to break even, because this was supposed to be an important area. So I shifted my stop loss to break even, waiting for price to do, and it came back and took me out of the trade. So I think that was when I decided to give up on the trade for that day. I did not have a winning trade for that day. Going to the second day, this was break even. I did not have any loss on my account. So going to the next day again, gonna see how it's gonna be for the next day. Okay, so the next day again, watching this. So I was waiting for price to sweep the liquidity above here, dropping down to the 1 minute time frame to see how it's gonna be right here. 1 minute time frame. This is gonna take long time explaining everything, but I'm so sure that you're gonna love it. Okay, so I saw this trade happening, taking up liquidity above here. Let me show you that. When I saw this liquidity grab happened right here at this point, so I was waiting to see a shift in market structure, and I saw this, guys. I saw this shift in market structure just here below this level. I considered this to be a shift in market structure, and I saw this as a breaker, this red candle. So I was expecting to take trade from here. I actually put my entry there, doing everything. My target was originally here, but I have the intention of shifting my stop loss to halfway or to break even once price reach that level. So I was waiting for price to come take me in, and it did. So once I saw price came here, I actually moved my stop loss because I'm dealing with a very short-term trade. So I think the next day too, I got stopped out at break even. So 2 days doing the same thing, guys, in the same manner. So I'm watching this to happen for the next day again. All right, so this was what happened. The next day again, I saw price took out the Asian range right here. This is somehow boring, but it will help you guys. This is the reality about trade. If you can only follow through everything I'm doing in this video. So I saw this happen. I saw this shift in market structure here, right there. Okay, at the exact time, and then price came back to this area. Where did I even enter the trade? Was it? Yes, here. I entered the trade, all right, in this very big favor lookup, because I wasn't so happy with this order block, and I decided to enter at the consequent encroachment right here. Let me show you. Right here, consequent encroachment, and my stop loss was here. I think somewhere around here, right? Let me see how many pips is this. 3. It was 5 pips stop loss I used. So I actually entered here. So I actually put my stop loss somewhere here. I don't know what happened that day, but I actually measured the risk to reward ratio, and I saw I was not so sure of the trade that day. So I reduced my lot size and then increased my stop loss. And I watched this trade happen that day almost, yes, I think it almost stopped me out, but because I used a bigger stop loss, reducing my position size from entry, I had a winning trade that day. Yes, I did have this trade as a winning trade that day. So I had 2 winning trades over the week, that week. So the next week is what we're going to check now. Still going to the next thing to do, happening everything. I'm going to show you without holding anything. I think if I show you the next 2 examples, we are good. So you can do this at any time, at any moment. So looking at this happening, let's see what's happening here. Asian range. Did I have any trade that day? I'm not sure. Okay, I think I had a trade. Taking out the high of Asia. Guys, if this video is taking longer, you can pause it and then continue watching it later. So looking at this, we took out the Asian range. Then my focus is here, right at this point. So I drop down to the 1 minute time frame to watch out for my shift in market structure. Okay, where did it start from? Let me see if I ever had. Okay, I had a losing trade that day here. I had a losing trade because I saw this happened right here. Where was it? Here. And then I saw this shift in market structure that happened right here. You know, if you're trading in a real market, it's not a replay, it's an actionable trade. You need to be very careful. So I saw this little shift in market structure and I was so excited. I was waiting for price to come back to this mitigation block. Yes, was what I used for entry. So crazy trade that day. I think was right here, and I was putting my stop loss here. My target was down at this point, and then I got stopped out. I think that day, boom, I got stopped out. So I lose that trade. So I had 2 winning trades so far, and then 1 losing trade. and 2 days I did not trade because I was doing good money management to make sure that I survive the evaluation. So you have to do a lot of discipline to pass through any evaluation. You have to take it very serious. So let's go to the next day. I think the next day, did I have a trade? I think the next day, yes, I did. I could remember. So I was waiting for price to give me that shift in market structure, and boom, I saw this little push above it here. Shift in market structure right here above the Asian range, and I was happy because I saw the movement here. Look at this, just this small push outside. I dropped down to the 1 minute time frame to wait for any shift in market structure, and then I'm gonna be in that trade. So I was waiting for it to happen, and I saw this very chunky. I saw this shift in market structure, and I was waiting for price to come back to this exact candle. I entered the trade right here. Let me show you where I took the trade right here, and then my stop loss was, that day I put my stop loss above here. Yes, I was a bit skeptical, and my target was, where was my target? I forgot some of the things I've done that day. Okay, so my target was somewhere around there. So the trade started walking. The trade started walking as planned. Let me show you the exact place here. So when the trade came back, I was actually in the trade. So it almost came back and stopped me out. And then I saw the trade worked in my favor. I actually had a winning trade that day because I had a very short target that day. It was this level, short target, about 17 pips or 20 pips. So that was the trade I took that day. So I went on over and over until the last trade I took, guys. So this is all about this strategy. You start from the daily time frame, and then you drop down to the lower time frame. Don't forget, your point of interest from the daily time frame is always this area. You are watching it because you're counter trading. As soon as you see price reach this area, you stop trading as a bearish trader in that market. So from the following weeks henceforth, I will only be trading a bullish movement. So this is all about this video, guys. I hope this video helps you well. Thank you for watching. See you in another video.